Hi there, I'm Jamie Roach from JWR Accountants. We've received quite a few queries recently from our existing clients regarding electric vehicles and paying for those through your limited company. So I've put together this video which deals with the most common questions asked. Okay, so there's two main things to consider here. First, if you're buying the car outright, albeit via cash purchase or something like hire purchase, they're both treated the same. If it was a brand new vehicle, you would get 100% capital allowance write-off in the first year. So, for example, if you bought a car for 50,000, your taxable profits would be reduced by 50,000, providing you with corporation tax relief on the whole amount in that first year. And using the current corporation tax rate of 19%, that would provide a reduction in your corporation tax just shy of £10,000. If the car wasn't brand new, capital allowances are still available, albeit on an 18% reducing balance basis. So if, for example, you bought a second-hand electric car for, say, £10,000, in the first year you get an 18%, i.e. £1,800 capital allowance, and in the second year you'd get an 18% of the residual balance brought forward from the previous year, and so on and so forth. So you still get some excellent tax reliefs if it's second-hand, but of course they're spread over a longer period. But of course, the price of the car will no doubt be cheaper than buying a brand new car. The other option is to lease the vehicle on a contract hire basis, which is effectively a rental of the car. And in this instance, the tax relief is spread over the term of the lease, because the rental payments are treated as an overhead of the business. So, for example, if it was, say, £500 a month, that'd be £6,000 a year. And so your taxable profits would reduce by £6,000. And your corporation tax would reduce by 19% using current tax rates of that, which is just shy of £1,200. Okay, so VAT is pretty simple when it comes to cars. You cannot reclaim the VAT on the purchase of the car. This is on the assumption that it's not a pool car, and of course there'll be some private use, which more often than not will be the case. And if you are leasing the car on a contract hire basis, you can, however, reclaim 50% of the VAT on the monthly rental payment. Okay, so assuming the car is obviously purchased or leased in the company can claim for pretty much all associated costs that come with the car, including insurance, repairs, maintenance, servicing, etc. And where applicable, VAT can be reclaimed on costs which, of course, have been subject to VAT in the first place. I think the important point here for us all to remember is, of course, if it is purchased or leased within the company, we are using company funds here rather than personal funds. So naturally, that means that we're not having to pay personal tax on withdrawing those funds from the company via a salary or dividend. And we're using company funds, so there's a chance of reducing our corporation tax and, of course, reducing our personal outgoings at the same time, which will have a knock-on effect or reduction on our personal tax. So company car tax will be payable by the employee or director who's provided with the car, and this at the moment is based on the value of the benefit in kind is based on 2% of the list price of the car. Okay, so even if it's second-hand and bought for, say, 20 or 30k, if the list price is, for example, 50,000, they will pay tax at their marginal rate of tax, which may be 20%, 40%, etc., based on 2% of the list price. So using 50,000 as an example, that, of course, will be £1,000, and for a basic rate taxpayer, they will only be paying £200 worth of income tax on having that company car, and that's each year that they have it. And then for the employer, they pay employers' national insurance on the same value. So currently they'll pay 13.8% on the benefit in kind value. So if it's £1,000, that would be £138 each year that it's provided. So the short answer to this question is yes, you can claim for the charging point. Of course, some people, larger employers, will be thinking about putting one workplace charging point in, and in which case, currently that they do qualify for the 130% super deduction, and then after April 2023, they will qualify if all other conditions are met for the annual investment allowance, which basically means either 130% or 100% of the cost of installing that charging point can be offset against their taxable profit, of course, reducing corporation tax further. For those that aren't able to do that for a variety of reasons, they may be willing to pay for installing a charging point at their employee's home, for example, and if it's for the purposes of providing them with a company car, that can be paid for, and it's not a benefit in kind for the employee. But just to confirm, that's on the basis that that employee has a company car as well. So if you paid, for example, for it to be installed at their home and they didn't have a company car, they would of course be taxed on that element. Okay, so reimbursing for electric usage for the car. For a company car, the employee or director can be reimbursed, of course, if they are charging the vehicle up themselves personally, based on 5p a mile for every business mile. And for those that have personal cars, personal electric cars that are using for business purposes, they can be reimbursed on the usual HMRC approved rates for non-electric cars as well, which is 45p a mile for the first 10,000 miles and 25p a mile thereafter. Obviously, it's a much lower rate for those that have company cars on the basis that the insurance, repairs, maintenance, etc., will no doubt be funded by the company. So really, that 5p a mile should just be reimbursing them for the electric use only. In terms of VAT, if the individual is using their own charging point at home, no VAT can be reclaimed at all. That's on the basis that the supplier, of course, is providing it to the individual rather than the company. But if the company is providing the charging point at the workplace, for example, you've got two options. One is to reclaim the VAT on all trips and then just make an adjustment for private usage, or secondly, it's just to keep a log of the business trips used and just reclaiming for the relevant parts only. There are some grants available for employers relating to workplace charging points, and there's quite a lot of detail there to go through, so it's difficult for me to go through them all, but below is the website for you to refer to and obviously research this further to see if you would qualify for any grants at all. Hopefully that was useful for you all and summarised the main questions that you've had around electric cars. I think the key points to take from this video is that there's obviously some excellent tax reliefs available relating to electric cars, and this, along with the minimal company car tax liabilities for directors and employees, does make them attractive for obvious reason. Whilst I'm not recommending that everyone should rush off and buy or lease an electric car, it's most definitely food for thought for those that have been considering it. And I guess we also have to take into account that none of us are sure of how long these tax reliefs will be available for in the future. As always, if you require any additional information relating to this, please get in contact with us.